We've got news out of Tencent, one of the big three BAT Chinese tech monopolies, tightening its belt, selling off positions, over $80 billion worth of investments in other tech companies that it's now going to start selling down those positions. And what's it going to do with all that money? I've got some thoughts. Let's check it out. So we got news out of China. Tencent divestment strategy sends chill through China's tech sector. The tech giant is shrinking its internet empire to appease regulators and investors. Interesting. So Financial Times has this write-up. Tencent's reining things in. It's reeling in its expenses. The soft target is part of a broader shift by Tencent to reduce costs as economic growth slows. So there's a number of things that just don't make sense to me on this. So Tencent has about an $88 billion portfolio of holdings in other publicly listed Chinese tech companies. They've got a nice list here. Meituan is basically the Uber competitor in China. Apple also invested in them. Pinduoduo, the Alibaba competitor, they started with like group buying in rural villages. And on down the line, you got some stuff based out of Singapore. You got Tencent Music Streaming, which they own a majority of. They own some of JD.com. They own some of Spotify. But these are really Chinese companies. They own Snapchat. They've got on this list here. So that era is gone of Tencent heavily investing in tech startups, says this analyst author that, from China. That era is gone after the regulatory crackdown and as Tencent's focus has shifted with the wider economic slowdown, she says. Tencent's move to scale back its spending and divest large chunks of its portfolio is representative of a broader shift in the industry. We can't keep providing unlimited support. We're selecting companies that can sustain themselves, said one Tencent employee with knowledge of the company's investment strategy. The person added that Tencent had been asked by investors to divest its underperforming assets, and the shift was testing the boundaries of the investment team. We're having to think in a way that we've never thought before. Kind of hilarious. Tencent said, "We have not received any external pressure regarding our investment portfolio. We will continue to make decisions independently and in the best interest of our shareholders." Okay, boilerplate. This is someone from the anti-monopoly agency. Tencent has a monopoly grip over gaming, instant messaging, and entertainment. That is true. China has an anti-monopoly agency. The irony, it's too good. The company has been very humble when dealing with the regulators. Still, we are looking for actual moves, like a 100 billion RMB, which is maybe 15 billion US roughly, to the Poverty Alleviation Fund, or selling stakes in listed companies. Tencent plans to pare back stakes in companies, including e-commerce player JD.com and Meituan, said one investment team member. Two people with knowledge of the matter said Meituan was not at the top of the investment team's sell list. In the following months, Tencent will keep executing sales of listed shares, including but not exclusively Meituan. Reuters had previously reported that Tencent plans to sell all or much of its $24 billion stake in Meituan. And then Tencent said, no, that's not true. Interesting, right? So, the government in China is clamping down on Tencent's tentacles, trying to rein in their power. The anti-monopoly agency is all over them. They know they're a monopoly. Our regulators could take a hint. But China doesn't like any competition when it comes to monopolies. The CCP is the ultimate monopoly, and the tech monopolies should all recognize they are subservient to the great and all-powerful and can never do anything wrong CCP, or else. And or else is what's been playing out for the past couple of years now. So, but here's the thing. Do you think Tencent's going to sell any of its shares in US or foreign listed tech companies? You think they're going to sell their shares in Spotify? You think they're going to sell their shares in Snapchat? You think they're going to sell their shares in Reddit, which is still a privately held company, but nonetheless? Do you think they're going to sell their shares in Epic, which owns Fortnite and a bunch of other things? Do you think they're going to sell their shares in other tech monopoly or on their path to becoming a tech monopoly in other parts of the world? No, they're not going to. Because this is about China saying, hey, You're too powerful in China, but I still would like you to be powerful abroad so you can make sure that the NBA doesn't speak out badly about China. I want you to continue to exert your international influence, Tencent. I actually wouldn't be surprised if the Chinese government says, yeah, sell the stuff internally in China, and I'll let you take more money out of China to invest in other US or other foreign tech companies also, right? Tencent saying, okay, yeah, I'll take that trade. You can't ever get money out of China. But if China's saying, hey, I want you to be less powerful here, but spread your influence out abroad, I mean, they got to do something with this money. That's what doesn't compute for me, is they're a monopoly. They are making money. They have a weakening economy, just like the rest of the world. Slowing in China, it's slowing here. But in those times is actually the best time where you see the large tech players able to double down and reinvest. Sure, you want to trim, you want to control costs just like everyone else, and you don't need as many people, you don't need to invest in growth as much as you used to. But now you've got a war chest, and what are you going to do with that? So wouldn't you want to go and do other tech M&A, right? Maybe they want to take some of these dollars of companies that are public and they are a minority investor in and say, well, I'd rather use that to buy companies that I could then grow and own all that upside, right? But I don't think the anti-monopoly agency is going to say, great, sell your shares in Meituan and then use that to go buy other tech companies that you're going to turn into another monopoly and further just get more powerful in China. I don't think they want that. So what I would not be surprised to see here is their US and their holdings of foreign listed tech companies stays the same, if not increases. Or does Tencent get into entirely new companies? And China says, sure, take that money, use it outside of China. That's one of China's greatest tricks is you put a bunch of money into China. That money 10x's, but you can't take that money out of China. Did you just 10x your money or did you just lose all your money? You tell me. A lot of companies are having to wrestle with that question right now. A lot of foreign companies, US, unfortunately, too many US companies. That's the thing here that doesn't really make sense. There's got to be some other stuff going on here about why they want to sell these things and then do what. I would imagine that internationally, if I'm China, I want my Chinese tech monopolies to make a bigger push internationally, and I want them to reallocate their resources to focus on that. We'll see if they do that. If you like this video, go check out our videos cataloging basically the state of Chinese tech monopolies, Jack Ma having to get reconditioning and re-education after his speech in the fall. We covered Didi's IPO, which was June of 2021. That thing just cratered. And a bunch of other scenarios where it's basically the Chinese government cracking down on Chinese tech monopolies. We cover the whole thing many, many times on the show. Go check out all those segments.